Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, I'm going to post a link below, not a link, a image below this interview. It's a chart of a GDX correction analog. Now, this was shared with your subscribers in one of your more recent premium updates. It really just takes the average correction for gold from 2002, 2006, and 2009 and maps it out compared to what we've seen really so far in 2020 and this correction that we have been waiting for. So we're really only a couple months into the correction for the 2020 period, but it really shows what we could be in for in terms of price action compared to the average of those three other correction times. Can you give us a little bit more color on what this analog is telling you?
Absolutely. And I think the second time there you mentioned gold, but it's gold stocks, as I know you're aware of. I actually should probably make one for gold as well. So we're focusing on gold stocks and GDX. And prior to GDX, I think GDX started in '06 or '07. And I took data from GDM, which is the parent index of GDX. They look exactly the same. And that goes back, I think, to the late 90s. So anyway, a month or so ago, Corey, we were talking about the best comparison might be the 2009 February correction where it made a low in a week or two. And then it had a really good rally and it came back down, retested it, I think 2 months later. So I was thinking originally that we'd probably follow that, but we've deviated off course of that. And so I'm looking at history. There really isn't a single best perfect comparison for this correction and how the market peaked. And so I kind of thought about, well, there's elements of some other period. So I wanted to kind of mix them all together. And that's why I picked the February 2009 correction, because gold stocks had a 4-month, 140% rebound. They crashed before that. So there's clear similarities there to this recent move. In 2006, that peak in gold stocks came after a really good move. I mean, it was 12 months long, but that came after a breakout. The 2005, that was a really important sector breakout in gold, but also gold stocks as well. So you had the breakout component there. And then 2002, that move was really early in that cyclical move, and the market just got really overbought. I mean, it was a really fantastic move. So, I mean, looking at all those three, they're all over the map as far as the corrections, but putting them together in one analog, this is what we get. And I'm not going to, belabor what the point about what it looks like, because if you go to kereport.com and you click on our interview, you could see the chart there. But basically, the average of these, you get a low about 2 months in, and you get a decent rebound. And then about 4.5 to 5 months in, you tend to get the next low. And so that's kind of, if we follow that, that's really the low that you want to be buying. Although, with that being said, Corey, so you have the element of price and time. So the price damage is basically, according to this analog, and we've talked about it before, generally the price damage in these corrections following bull moves within a bull market, it tends to be done for the most part really quickly. So that analog argues that the price damage the average, it would all be done, in the next week or two. And so I don't know if we hit a low on Thursday. We hit a low of 37 on GDX, which was strong support. Days prior to that, I mentioned, in the 35s, just below 36, that could be an area that we test. So, it is possible, Corey, that last Thursday, that we did hit a low in terms of price, but it's also possible that, this weak rally that we're having, it rolls over and we actually make the real first low in the next week or two. And it's an important point, so I'll say it again. In terms of the price damage, the majority of it will likely be over in that case. And then the correction just becomes time. And, where we get a decent rebound and then we get another sell-off and we kind of retest the low later in the year. So that's kind of the framework that I'm looking at right now. And looking at the metals, I mean, it could be similar for gold. It's put in a good low around 1850. I was talking about the low 1800s, maybe even the high 1700s. So I mean, that's where we are. I mean, a good amount of the price damage has already been done. And look, we just have to prepare ourselves for, in the big picture, several more months of chop, of moving back and forth. And in this type of correction, Corey, we want to be buyers on weakness. We don't want to chase rebounds and chase strengths. Not yet. Not until we're 4, 5, 6 months past the August peak. So that's what I'm looking for. And hopefully maybe we'll make the low in the next week or two. And if that happens and we roll over in the next week or two, we definitely want to be buying that low that we would be coming into.
Interesting. So do you think that this is a trading opportunity for those that are interested in more short-term trades when we do, or if we do get another, not washout, but a gradual move down, that if you buy that low, then maybe trade out of that position if it does take off kind of in this 2-month period here that it looks like you've outlined from the past corrections?
Corey, it's a good low to be bought, I would say, by investors, buy and holders, as well as traders, because if you have some stocks that you like, and again, if we do make this low over the next week or two, with all the price damage already being done, for the most part, that would be a good entry point if you are an investor. And of course, if you are a trader, because these moves you get in a correction, you typically have 3 legs. You get the move down, then you get the bounce, then you get another move down after that, and the correction tends to be over. So, I mean, I know that's too long of an answer, but yes and yes, it's a good buying opportunity if you're a long-term investor, and also if you're a trader. I mean, if you're a trader, yes, you buy, and then after you get a rebound for a month or so, then you can sell those gains, because it's going to take more time for the market to break out. But look, regardless of if you're a trader or investor, you want to buy the low.
What about the other aspect, too, of that a lot of the price damage could already be over with? Fine, we might have a little bit more downside, but that almost speaks to me saying that there's not any point of trimming any more positions here if you have already rode this recent correction as far down as it has currently gone?
Yeah, I would say with trimming, looking at the 3 corrections and the first big bounce that we got, in every case, I think they retraced 62% or a little more than 62% of the losses. So let's say in the next week or two, GDX comes back down, it hits 36 or the high 35s. That would set up a pretty good rebound. And I was thinking about this the other day. My target for that, I know we're getting ahead of ourselves, but my target for the rebound would probably be around 42, which is a little bit higher than where we are now. So I guess, right this moment, Corey, it's too late to trim something, but just be a little bit patient. And if we do get a bigger rally in October or into November, that could be a time to trim something that made a really big move. Maybe it had a huge correction in recent weeks, and maybe like I said, maybe October, November, it retraces some of those losses. That would be an opportunity to trim. But as far as where we are right here and now, I don't think you need to think about trimming. And yes, it's too late to trim something right now.
Okay. Now, when it comes to stocks, I know that you like to save individual company names for your subscribers, but what area of stocks, of the precious metal stocks, are you focused on right now?
In my research, Corey, I've been looking more and more at development plays. I think there's a lot of upside if a company is going to be building its mine in the next year or so, next year or two, we could say. And I mean, what I'm looking for is, yes, I'm looking for that timetable. I'm also looking for the CapEx to build the mine is not $500 million or $370 million. That's really hard for a junior to do. So I'm looking for stuff that's under $200 million, basically. I'm also looking if they have potential to scale that project. I mean, maybe The feasibility study says they could produce 100,000 or 125 or 150, but then there's potential where they could expand that to 200 or 225 with additional capex in 2 or 3 years. I mean, that kind of situation. Number one, they build the mine, they're going to be tapping into really good margins in a really good market. Secondly, if they can expand the production for a limited capex, that's going to be really appealing to a potential acquirer. And then the third thing, Corey, is, and not every company has this opportunity, but if you can add some exploration potential into that, I mean, that's just the cherry on top, because I mean, I will mention some individual companies which I may or may not own. If I do own them, I could, buy them or sell them at any time. I'm just clarifying that. But if you look at producers, what comes to mind as far as companies that have been the best performers over the last 3 or 4 years? I mean, Kirkland Lake, all driven by exploration growth on a lower level. Wesdome Gold Mine, still extremely successful. What they've done at depth with their Kiena project, that's facilitating huge production growth coming down the line. Another one is KN2 Mining in Papua New Guinea. I mean, they've had fantastic exploration success over the last 3 years. So if you look at how well those three have performed in recent years, that's an example of how exploration can really add to your story and can add a ton of value if you're already in production or going into production. So I know that's a lot to take in, but I think with developers going into production, I see a handful of companies there that have really good potential. I mean, just beyond just being a double or triple. I see some of these stocks having like 5x potential. So I'm really excited to kind of look in that niche, see if I can find some more names.
Okay. Well, Jordan, thanks for sharing what you're looking at, and also this analog. I think this analog is very interesting to see, especially from the fact if it does play out like the average of the other three corrections, then a lot of let's say the worst is for the most part behind us, barring maybe one more quick little washout in some of these stocks. But hey, man, there's a lot of push and pull going on right now, and a lot of attention, I think, has been taken away from the precious metals, but hey, there's a lot of money that came into the sector. So we're still, I think, in a good position, but might need some time here to keep moving this market sideways. Jordan, thanks for your time today. I'll post a link to your website. Chat with you again next week.